Hi, good week to all. This is Kelvin here. Welcome to a brand new week, as this will be the start of the week where I will share with you all the latest weekly technical outlook on the major stock indices that we used to cover the SPX 500, the NASDAQ 100, Hong Kong 50, the Japan 225, and the German 30 index. So before we start, let's take a look at the disclaimer slides first. Great. So before I jump into the key technical configuration and the latest key levels to watch on the various indices, let's take a quick glance on the weekly performance and the prior week performance on the major stock indices across the globe. So as you could see, last week weekly performance for the week of 15th of March to 19th of March is pretty flattish over here. We could see over here, it's more like a profit-taking week for the major stock indices, negative 0.77% on the SPX, the NASDAQ 100 negative 0.54%, the Dow Jones Industrial Average negative 0.46%, and I would say interestingly, the outlier will be the Russell 2000 underperformer negative 2.77%, and what's pretty I would say positive over here is that if you compare it with the prior 4-week average on the US stock indices, the S&P 500, the NASDAQ, the Dow Jones, the Russell, I would say overall it's kind of almost the same. There's no much major deviation after a kind of a strong stellar gains weekly performance on the prior week. So it's normal to see a kind of a profit taking or a pullback scenario for these major US stock indices. And another positive sign is despite the rising US Treasury yield curve, taking the proxy, the long dated one, the US 10 yield, surging past 1.6% last week, and in fact, it actually closed to a high of 1.773%. Whereas we don't see a major sell off on the growth proxy, which is the NASDAQ 100, which is pretty positive. And one thing I want to highlight would be especially the one that's closer to mainland China, the Hang Seng Index and the Hang Seng Tech Index, where, as you all know, that the Hang Seng Tech Index comprises of China big tech stocks like Alibaba, Tencent, Meituan, JD.com, as is one of the generals that is inside this tech index. Last week, I would say that it's pretty positive on their performance, positive 0.87%, and especially very surprisingly, I would say with our expectation, 1.12% positive on the Hang Seng Tech Index. So as you could see, if compared to last week performance, and especially on the prior 4-week average, it has started to actually turn up and stabilize on its previous last week weekly performance, especially on the Hang Seng Tech Index. Prior 4-week average is a negative 4.86%, the worst among the lot among the major stock indices that I monitor, reversing up to a positive 1.112% on last week. So we could see it's a bit of turning upwards or a bullish reversal sign for the Hong Kong stock indices, all right, which is to me, it seems to me that it's rather positive. Nikkei 225, not much changes. One of the strongest that we have will be the German DAX index. Also profit taking week for last week after a strong stellar weekly performance on its prior week. Almost no change since from last week versus the prior 4-week average weekly performance at 0.83%. So as you know that German DAX is we tend to have a closely watch in this last 2 or 3 weeks or so because of its heavily weighted according to cyclicals and value play, which we still expecting to be the outperforming play in the coming weeks ahead. All right, so now let's jump on to the various technical configuration and the trend bias of the major indices that I would like to cover for you all. Okay, let's go on to the CMC platform. All right. So let me open up the SPX 500. So before I take a look at the SPX 500, I'll tend to look at one of the growth proxy as a quick gauge, right? Will be the semiconductor ETF globally. So this is a semiconductor ETF listed on the US stock exchange, which is called SOX in short, SOOX. So this is the daily chart. So as you could see on the daily chart, the major uptrend since the 18th of March, we call it sell off, induced by the spread of this coronavirus global infection, or quite the pandemic induced sell off, 18 March low. There's this ascending uptrend that is still pretty much intact, and also the 200-day moving average that managed to help previous setback in the price action. So what we could see in terms of previous setback, right? The steepest one we have was 2nd September 2020 all the way up to 29th of October 2020, and most recently from 16th Feb 2021 high all the way down to 8 March 2021 low. Okay, all this previous setback has been held by this long major ascending trendline support and the 200-day moving average. So I have this key support at 38.230. So as long as this 38.230 holds this major uptrend for the SOX index, I would say that the global semiconductor stock outlook still remains positive based on this technical configuration that we see from here. So I'm still expecting another potential, we call it up leg after this churning period is over. So as long as this 38.20 to 2 permit 382.30 holds, I'm still expecting another leg up to test a new high at 458 slash 46550, which is confluence by a confluence of a Fibonacci expansion level. All right, so daily RSI still in as a gauge of medium term momentum is still rather positive, as you could say, turning up from this support level that I have at this 41 level. So all in all, right, what we could expect over here is still have a kind of a medium term bullish biasness on this semiconductor ETF index SOX in short, which is one of the global proxy growth. I would say that team play that we can look at that still support this ongoing risk on scenario on the global stock indices as per se. Okay, now let's jump on to the SPX 500. Let's start with the daily chart first. So daily chart, right? Last week, still it managed to shape a kind of a higher high at this 39.90, a brand new all-time high. That was okay. In fact, it's 39.89. Okay, printed on 18th of March before shaping, kind of a one day of a pullback to close at 39.07 on last Friday US session. So no big changes over here. I would say there's no clear sign of a what you call it topping formation on the medium term. So what we could see is still trading above this ascending trend line support that is in place since the start of this major uptrend phase since the low of 23rd March 2020. Still holding above the 20-day moving 50-day moving average, pardon me, after a test on 5th of March. This we start to see this kind of a pronounced pullback recently, close about 5 days from the high of 15th of Feb. Okay, tested this again on the pullback support level of the prior significant expanding wedge resistance that is in place since September 2018 high. The one is dotted green, dotted in pink. So far it hasn't reintegrated back below it again. Tested on the second time on 5th of March and on the 29th of January. All right, RSI still holding above the 50 level and holding above this ascending trend line support that I drew from the fifth at 45 level mark. So in terms of medium term momentum, I would say still rather positive. No sign of what you call it medium term topping process yet on the SPX 500. So all in all, right, what I have for this week's strategy, no change. So if you call last week, right, we have this 39.60, which was the previous high, slash 39.90, which was this first target I have, or first resistance target I have for the SPX 500. I would say give or take almost tested it on the 18th of March, which is 39.89. Okay, 39.89, that was the high. So what we could see now is here we shape this pullback on Friday, now coming very close to this pivotal support level that I highlighted last week, 38.60/50, which is also this pullback, this kind of short-term pullback line of this former descending resistance. All right, linking the previous lower highs of 16th of Feb and 25th of Feb, now taken up, turns into a pullback resistance as pullback support right now, which confluence to the 38.60/50 pivotal support that I have last week. So no change, right? I still maintain this pivotal support I have last week at 38.60/50. Still looking for another potential up leg to actually retest 39.90, pardon me, 39.90. A break above 39.90 should take us up higher towards 50.80/4100 level on the SPX 500. So that's our kind of a 1 to 3 weeks directional view or medium term view on the SPX. Okay, now moving on to the NASDAQ. So for NASDAQ, right, Before I go to the strategy chart, okay, let's go on to daily chart first. Okay, so daily chart still pretty unchanged. There's still kind of a churning or sideways between this 13,340, 12,400 level. All right, so what's 12,400 level? You could see pretty much obvious. Previous resistance, tested, rebound, held, rebound. All right, RSI holding above this 37 level mark, still turning up right now, but still below this 50 level and also below the 50-day moving average. So all in all, right, for last week you recall we have a neutrality stance on this Nasdaq 100 for about a week and so. So still keeping this neutrality stance from now 13,340, 12,180. So what we could see over here potentially right now, right, one thing positive over here is that there's this bullish divergence. And if I could highlight for you in this color, okay, let me draw for you. Okay, so what we could see over here, all right, so in terms of the 4 hour chart, right, this is the 4 hour chart. Okay, 4 hour chart on the Nasdaq 100. So it seems to me that after this very severe sell off, after this sell off, where it bounced off at 12,180, if you recall, what's 12,180 is the 61% retracement that we drew earlier on last week, taking from the lows of the wave 2 low of 2nd of November all the way up to its all-time high, all-time high 16 Feb 2021, 61.8% Fibo retracement, as well as a Fibo projection from this severe down move, taking from the high of this, project to the low, and project up to this swing high at 1334, this one time off. So you have a Fibo retracement and Fibo cluster at 12,180, which correspond to this pullback support from 2nd of Sep 2020 high. That's drawn from here. All right, and right at this swing low, we start to see this bullish divergence on the 4 hour chart, and the 4 hour RSI also starts to turn up, but still below the 50% mark. So what we could see over here is it could be forming what I call it an medium term or a kind of medium to short term inverse bullish inverse head and shoulder, kind of a positive chart reversal formation on the upside. This will be kind of a left shoulder, head, right shoulder. All right, an inverse head and shoulder. So the neckline of the inverse head and shoulder is at this neutrality level, which I highlighted last week at 13,340. So definitely we got to see a break above 13,340 before I could validate my bullish case, or I would say that in terms of probability, it tend to increase this bullish recovery scenario on the Nasdaq 100 to target 14,030, then thereafter 14,435. All right. Now, moving next to the Asia indices, that is the Hong Kong 50 or Hang Seng Index. We call it in the main in the media, in the mainstream media, Hong Kong 50, because due to some copyrights issue, that's why we name it in our platform as Hong Kong 50, which is the Hang Seng Index. So as you could see, right, no change on my strategy for the Hong Kong 50 since the 30th of October low 2020. This is the medium term uptrend that is still intact, this trading in this ascending channel. Previous decline from 17th of February managed to help at this ascending channel support since 8th of March low. So I'm still keeping the pivotal support at 28,000 level. So but definitely it's still you got to have a clear break above this 13,160. So what's 13,160 is the descending trend line that is drawn from the top of 17th of Feb, and this previous swing low from 19th of Feb as well, confluence to the previous swing low of previous swing high of 21st of January and 25th of January. So you got to have a clear break, or I would say a 4 hour hourly close above this 13,160 to actually reinforce this recovery view to actually target the next resistance at 31,600. So kind of no change for the Hong Kong 50, still kind of a sideways formation first before a potential up leg, as if we have a 4 hour close above this 13,160, then key medium term pivotal support still remains the same at 28,000. Okay, now moving on to another Asia indices, which is the Nikkei 225 or Japan 225, we call it in our platform. Okay, take a bit of time to load. All right. So if you look at the Japan 225, seems to me that since the high of 16th of Feb at this 13,285, it's kind of been trading kind of a sideways formation. Over here, it could be potentially a kind of a like we say a kind of a symmetrical triangle. Okay, let me draw for you all. Okay, it seems to be in this symmetrical triangle formation. So post BOJ on Friday, it doesn't seems to be quite rosy. Managed to, we call it a sell off. So but this sell off, where is it resting right now? Actually resting at the lower boundary of this impending symmetrical triangle consolidation, which is also the 50-day moving average at around this 29,200 level. All right, RSI still holding, daily RSI still holding above this significant corresponding horizontal support at the 39 level. So for the strategy that we have for last week we have key medium-term pivotal support at 29,000. So where's 29,000 is actually this pullback support of this former descending resistance that I draw from 16th of Feb 2021. And right now the price is actually flirting around with the 50-day moving average as seen on the hourly chart. So if you have to draw a, let me recall, if I draw this Fibo retracement for you all, all right, this 29,000 taking from the swing low of 5th of March, the last, so I'm drawing from the previous swing low to high, is taking into account this the last push up is actually now stalling at the 61.8% Fibo retracement level, which is pretty interesting as well. I would say this is a kind of a important inflection level, at least in the medium term to short term, confluencing at the 61.8% retracement and graphically at this 29,000 level. In terms of mathematical indicator, will be the 50-day moving average at this 29,200 level. So still no change. So what I'm still expecting is then the RSI is now is back to the oversold on the 4 hour, indicating to us that this short-term pullback seems to be a bit overstretched, where we could see at least kind of a rebound, at least in the near to medium term. So 29,000 will be my key medium term pivotal support. Still looking for this push up towards 30,230. Break above it should take us up again towards the 16th of Feb 2021 previous swing high level at 30,750, as this Japan 225 continue to actually involve in a kind of a medium term symmetrical triangle formation. All right, now moving on to the European Barometer Index, which is the one most of us is watching, is the German 30 Index. So on the daily chart on the German 30 Index, recall last week we have this first resistance or first upside target at 14,730, which is actually it met already on 18th of June, which is had a swing high of 14,804. So still no change on the index itself. Price action higher high, higher low. 50-day moving average now coming to support at this 14,130, which is the previous swing high of previous range top of 11th of Jan towards 12th of February. Taken out now turns into a pullback support. RSI still hasn't hit the extreme overbought level yet at 76. So let's go to the 4 hour chart to see what's the kind of a latest level that we should watch for this week. So what we could have is that last week I have a medium term pivotal support at 14,130. Since it's already hit this kind of a first resistance that we, or upside target that we have, I will actually tighten it to this 14,335. So what's the 14,335 is in fact this steeper ascending trend line channel, or ascending steeper ascending channel, pardon me, that I drew from 26th of Feb 2021 low, and as well as the 50% retracement from here, taken off from the low of 5th of March to 18th of March high, 50%, and also banging off 50%, 15% mark. All right, so what we have over here is tighten it to 14,335. Still looking for a further potential push up to retest last week high at 1405 before targeting the next resistance level at 14,930 slash 15,020. Maximum is 15,150, which is the 1.618% Fibo expansion level taking from the low of 1st Feb to the high of 8th of Feb, connect to the low of 26th of February. So that's the kind of a wave 1, wave 2, wave 3 impulsive up leg target in the medium term. So all in all, what we could see over here is that the major indices that are highlighted to you all the way from the US to Europe, including Asia, the Hong Kong 50 and the Japan 225, all are still holding on to their key medium-term pivotal support. No change in their medium-term pivotal support level except for the German 30 index, where I tightened it to 14,335 for this week. Because it's already hit the first upside target that we had, that we highlighted last week, to look for a further potential push up. Then for the NASDAQ 100, it's still kind of neutral, so watch the upper side neutrality level. So one thing positive on the NASDAQ 100 level itself is that despite this rising yield curve that is prevalent in the market right now, last week rise in the yield curve to actually a new fresh higher highs, which is at 1.7% on the US 10-year yield, it doesn't have a significant sell-off impact on the NASDAQ 100, which is the proxy for growth stock. So if you look at the prior 3 to 4 weeks, growth stocks, especially on the growth stocks, where NASDAQ 100 is a proxy, took a several beating in the last 2 or 3 weeks due to this rising yield curve. So it seems to me that it has started to stabilize, which is a good sign for global stock indices, and also this NASDAQ 100 is been kind of a tracing out a potential short to medium term inverse bullish head and shoulder formation as well. So all in all, it seems to me that market has started to stabilize due to this rising yield curve. So it started to kind of readjust in this rising yield curve environment. Not too scary scenario to actually trigger a major risk off event yet. So do have a great trading week ahead, and I'll see you all next in my next video.